So key risk for any actively managed scheme is change in the fund manager. Even before investing in a scheme, it is imperative that an investor check the fact sheet. There they mention the time from which the current fund manager is managing the scheme. So the chart here you see is that of a fund for which the fund manager has changed in the year 2022. So if an investor looks at this fund, right, most likely he or she will reject. So over an 8-year period time horizon, so on an absolute basis, this fund has outperformed the index by just 5%. So if somebody has invested around 100 rupees on 1st January 2017, at the end of the, as of today, this would have been around 289 rupees, right? For the same fund, this would have been around 303 rupees. So here the comparison index is Nifty 500. So now let's just look at what has happened before the fund manager has taken over this fund, before the change and after the change. So this is Nifty 500 uh, data from 1st January 2017 to 30th June 2022. So we have calculated the rolling returns over a 1 year, 2 years, 3 years, and 5 years basis. So these are the minimum returns. We have calculated the maximum, median, and the mean returns. And here we are having negative instances and the positive instances over the period of time. Same thing we have done for this particular mutual fund. So the minimum, maximum, median, and mean returns across the rolling returns for 1, 2, 3, and 5 years, and the negative instances and the positive instances. Now let's look at the comparison of these both funds. So during this is the comparison from Jan 1, 2017 to June 30th, 2022. So this fund has consistently underperformed the index. Especially if you look at the median returns, this fund has delivered anywhere between 6.9% to 8.15%. On the other hand, Nifty 500 has delivered between 9.26% to close to 13%. 3 to 4 percentage point of 4 percentage points outperformance on the median basis. So only two times where this fund has outperformed the Nifty 500 indexes on the minimum returns, that too on a 1 year basis, on a 3 year basis. And even if you look there, the outperformance has not been much, right? Ideally, anyways, the time horizon for any equity investment is over 5 years. But again, only time he could have this fund manager has delivered that is like on a minimum return basis, which is not so great. I mean, like this does not even reflect the downside protection actually. So let's just look at the chart. So if somebody has invested on Jan 1, 2017 and has stayed invested till June 30th, 2022. So this the mutual fund would have delivered like a 63.8% absolute return. On the other hand, Nifty 500 would have delivered a 91.18% absolute return. So on an absolute basis, there is a delta of around 27-28%. So now let's look at the data after there is a change of the fund manager. So this data will be less than 3 years old because there are 3 more months. In 3 more months time, then it will be 3 years. So similarly, we have calculated the rolling returns for 1 and 2 years. So since the data is small, same for the mutual fund as well. Mean, maximum, median, and minimum return, and the number of negative and positive instances. So here the fund manager within these 2 years has consistently outperformed the index. Like even if you are looking at the minimum returns, maximum returns, the median returns, and the mean returns across I mean, like, of course, the time horizons are 1 and 2 years only, but he has done an exceptional job, right? So this alpha which he has generated, like see, in case of the median returns, if you look at the 2 year time, it is like over 13%, close to 13%. So this 13%, when it is split across multiple years, this outperformance will last very longer actually. It will give a huge fillip to the fund. So now let's just look at the chart. So here, if you look at it, so if somebody has invested on 1st July 2022, 100 rupees, this fund would have delivered an absolute return of 85% compared to the index at 50%. Of course, the last 2 years, there has been a very good run in the market, but this fund manager has done extremely well. in the last 2 years. And the outperformance over the index is like close to 30% on the absolute terms. So someone evaluating this fund would have rejected it by seeing the long-term averages, right? And on the other hand, if the reverse happen, an investor would end up buying the fund by trusting the averages and attributing the past performance to the present fund manager. This is something which an investor should be very careful about, and they have to look at how the when the fund managers have changed, and how was the past performance and how is the present performance. So this video is for educational purpose only. It is neither an recommendation to buy nor sell the asset class in discussion. Thank you.